Well, hi, everybody. Thank you so much for joining us for this event. I'm Rick Edelman, and I'm really excited that you're here with me. We have a really exciting panel going on today with this session, and I'm really enthused about it because unlike many of the webinars, that we do, which is sometimes a little bit theoretical, philosophical, this particular event is very practical and tangible. So I know you're going to get some actionable information here in this particular program. So with that, I'm really excited to introduce this session, What's Next for Crypto Advisor Managed IRAs, with our special guest, Sean Ristow. Sean is the EVP of Prime Trust. Sean, how are you? Great to see you.
Rick, thanks so much for having me. It's a pleasure. Always enjoy doing these webinars with you and helping educate the crypto and digital asset community.
So this, and this is going to be a great opportunity for that, Sean. He and I have done a number of events together, live as well as virtual. And there are a lot of questions that we have gotten in advance from the attendees who registered and submitted a bunch of questions. We're going to get to all of those. But before we do, there were a bunch of questions about Prime Trust. And many of you may not be familiar with the company. So Sean, as we begin, do me a favor and spend a moment talking about what it is Prime Trust does, the services that you provide.
Yeah, absolutely. So Prime Trust powers innovation in the digital economy by providing fintech and digital asset innovators with financial infrastructure. We actually, we provide a full stack, full service API platform. It's integrated with we have well over 200 customers actually right now. And, with the vendors that we use, our 200 base customers and then another 350 over other customers. But all of this is done through a single API. We were founded in 2016. We're a state chartered trust company, FID audited, qualified custodian, have our own BSA AML program, ISO 27001 certified. And recently, actually, we just obtained some of our SOC certifications. So SOC 2 Type 1, SOC 2 Type 2. And then we're also PCI compliant. And one of the other things we take very serious is our risk management and internal auditing, which report to our board of directors. And we have an extensive amount of experience. I myself come from the trading industry, been in the trading space for 22 years. We also have folks from the OCC, the SEC, Federal Reserve, Visa, and quite a few other large corporations.
So elaborate on this for me. In terms of being a state chartered trust company and qualified custodian, as opposed to what? If you're not a qualified custodian, you're an unqualified custodian. What's the difference between a qualified custodian and one that is not qualified?
Yeah, so where we fall is in the legal framework, there is a difference of what you're allowed. Theoretically, many firms can be, if you will, a custodian. But there's a different level of qualification that you need to actually be a qualified custodian. And that's done, really through the various regulatory statutes and whatnot. And so that is something that we've obtained, through the various integrations, various services that we provide, and also just overall the level of compliance and regulatory structure that we have as a firm.
So basically, as a user of your services, you're targeting who? Individual investors or investment advisors?
Yeah, that's a great question. So when we, go out and talk with customers, our focus is more on a B2B relationship. So a lot of folks won't even know that Prime Trust is really behind the scenes handling all of their actual custodial, funds processing, compliance, various other pieces that we have in our API stack. The only time people might notice is when they have to sign our custodial agreement that's integrated with the various platforms that use the Prime Trust services. So really, if you look at it from a big picture, we do not go direct to consumer. That is, we have our customers are facing the consumers, and that really we kind of maintain a very agnostic approach, and so that we can service, there might be 5 different payroll depository applications. We can service all of those, and we take an agnostic view on it, rather than us going all the way to the end consumer level, if that makes sense.
So, it's interesting. You've been around since 2016, and ordinarily folks would say, gee, that's not a very long time. I mean, BNY Mellon's been around since 1792. And so 2016 doesn't sound like a really long time until you realize that crypto has only been around for 13 years. And most firms in this space, if they have 2 years, 3 years of experience, that's a lot.
Right.
2016 is actually pretty far back.
Yeah, I mean, so I joined the firm in 2019. I was actually a customer of Prime Trust prior to that. That's how I actually came to know the firm. And it actually plays into why I ended up actually, doing business with Prime Trust. I was actually doing about 7 to 9 million a week in OTC for a firm that I was with. We were running a mining operation, and we needed a place to store our digital assets. And the general opinion was, I'll just put it on a hardware wallet and then we'll be fine. And I said, no, we can't do that. If this is part of being a professional operation, we need to have a qualified custodian, one that's regulated, audited, has all the checks and balances to protect us as a firm. So really, if you look at it from the evolutionary point of view, 2016, yeah, it's not that far long ago, but if you're working in crypto, it is probably like 60 years in my head. I think every year is about 10 years with how much time you end up working on a daily basis. Because the one thing about this market that's different from all other markets, it never closes.
Yeah, that's one of the most challenging aspects, isn't it, from a regulatory and compliance perspective, is that it's a global asset 24/7. And the fact that it never closes means you never have a closing price. And it makes it a bit challenging. We have a lot of questions from folks. And by the way, you're welcome to post your own questions here live during this webinar. Just go to the Q&A section, the bottom of your Zoom screen, and I'll be checking that as well as we go on, and fielding those for Sean as we go. We have a lot of questions from advisors, particularly about implementation. How do I get engaged with crypto with my client in a compliant way that is a relatively safe way in this digital world? And we're going to get to all those questions, but we also have a bunch of questions that are really much more basic. And so I thought it would make sense to start there, to start at the bottom and then walk before we run. So Sean, let me just hit you with one of the first. AUA versus AUM. Talk about the difference between assets under administration and assets under management, and why that distinction matters so much for advisors.
So when we're dealing with assets under management versus assets under advisory, I mean it's different from a context of, we actually are focused more on assets under management or custody, because then, Prime Trust being a custodian, we have the, traditional custodians, you put the assets to work. And, that's really how custodians traditionally have made money in the traditional markets. But, with digital assets, there's a lot of different nuances. And so when you're an advisor, it's the market is changing than, from where it was before. And what I mean by that is that when you're dealing with, digital asset advisors today, they are expecting you to provide them a software platform. And that software platform, is going to give you all these tools. And then, how that fee structure is done and how they make money is really, goes hand in hand with a lot of of what I'm talking about right there. So, you know, from our perspective, we are, you know, working on quite a few initiatives and being very flexible to the advisors, though, because not every advisor is going to want to use, you know, the same, if you will, pricing structure. But there are restrictions, obviously, being it being a regulated space, that you have to, you know, there's only certain things you can and can't do, and it really depends, you know, on the type of firm that you're dealing with.
And speaking of that, you know, since you said there are different ways you can price and different methodologies, is this a regulatory issue? And who regulates you? Is it FINRA, the SEC, the states? And what exactly is your role? Third-party custodian or trust company? Talk about that framework, the relationship between not only you and the regulators, but between you and the advisor. Yeah,
absolutely. So the way that we work, being a trust company, we are regulated by the Financial Information Division of Nevada, which falls under, it's the regulatory arm for trust companies. And so we, as a firm, that is our standard regulator. Now, when we go out and deal with advisors and things of that nature, they're opening up and doing their agreements with Prime Trust, which is state regulated. So we are not regulated by the SEC, FINRA, we're not a broker dealer, things like that. And being that, though, you know, we're being a trust company, we're limited to certain things that we can do, that banks can do, that we can't, if you get what I mean. That said, though, when it comes to, you know, the structure and how all of this is laid out, our focus is more, again, being on the back end and being that custodian. So we can do a traditional model where we are the actual custodian. We onboard all the customers. They have their own accounts with us, things of that nature. They sign a custodial agreement, etc. Or we can do a sub-custodial model. In a sub-custodial model, I like to call that kind of a bolt-on type solution, because what we're doing there is we're augmenting a custodian and allowing them to focus on their core business, which most likely is traditional assets and, you know, things that have been here for a long period of time, while we focus on these emerging assets in crypto and digital securities. And, you know, now you have DeFi and all the other fun stuff that's coming into play.
And one question we have from one of our audiences, there's some familiarity with Bitria, which was recently acquired by Gemini. Those are two fairly prominent firms. And the question is, how are you similar or not to Gemini's Bitria?
So Gemini is you know, we share similarities in things that we do. You know, they are obviously regulated by a different regulatory body than Prime Trust. They are a New York trust, and we are a Nevada trust. And so, you know, with what we do, we're doing very similar items that they're doing at that firm, in the form of, you know, we're working with many of the wealth management platforms to roll out solutions for advisors, you know, that use your standard platforms but need the ability to custody digital assets for various customers. And so we're providing them with the custody and the various tools. And the way we do it, though, is a little different than Bitria, in that, as I mentioned earlier, we're very agnostic. So we welcome having all the various platforms integrate to Prime Trust. And then on the back end, we're still the custodian. We're still doing all, you know, all of our activities as a custodian. But we want, in my opinion, what I want is, I want the RIA and the clients that they serve to have the best solution possible. And the only way that you can have the best solution is if, on an individual basis, it meets every single thing or close to every single thing you need. It's kind of like when you buy a car. when you go to the dealer, you can get the base model, you can get the mid-tier, or you can get the luxury. And it's, that's really the stance we're taking is more here's a toolbox of different tools, and they're all integrated with Prime Trust. Which one suits you best is really driven by the actual end advisor or their actual firm that they are related with.
Well, I think that's a big part of the confusion that a lot of advisors have, Sean. I'm glad you mentioned that because, on the one hand, you've got a lot of advisors who say, I can't do anything in crypto. I'm not allowed. It's not regulated. I don't have the ability to open a crypto account somewhere on behalf of a client. And if the client, were to open an account somewhere, I have no lens into that account. I can't service that account. I can't rebalance it. I can't trade it. I can't do tax reporting on it. I can't debit my fee from it, et cetera. So talk about that element of how Prime Trust does allow the advisor to engage with the client in a crypto portfolio.
Yeah. So, having spent time in this space, in the traditional wealth management space, and then, getting into crypto, I got in December 2011, and back then there was nothing, literally nothing. And it's been interesting to watch this industry continue to grow. But the thing that is not, grown is on an institutional level until recent, I'd say in the past year and a half, you haven't seen institutions, large software platforms, want to spend time and development cycles on putting together a platform that allows them, even if the assets are not being held at their traditional custodians, even allowing them the ability to see that data, pull that data in, so you can have a holistic view. And so what we're doing is working with a majority of the actual wealth management firms, platforms, and helping them by enabling them to integrate into Prime Trust, which gives them, their advisors, a 360-degree view. If I go to my customer and say to them, here's all of your, I'm gonna rebalance your portfolio. Here's your portfolio for all your traditional assets, stocks, bonds, fixed income, etc. But hold on, I got to do all your crypto. That's separate. I can't do it together. That is, to me, kind of like a half-baked solution.
Yeah, right, exactly.
And very fragmented, very prone to problems. And then especially when it comes time to actually putting the holistic picture of let's just say you're householding. And if I have to do a whole household, what I am finding is a lot of advisors, they are not including their kids, the kids of the families that have, $500,000, $800,000 worth of crypto because they got in really early. So when you do that picture, it gives a very fragmented view. And what we want to do is, again, part of our mission at Prime Trust and what we strive upon is to really allow people to focus on their business. And we do all the infrastructure, the plumbing, the pieces behind the scenes. But we also are a trust company and inherently a financial services company. So it's a very unique combo. You're either a software firm usually or a financial firm, but we're in that middle where we're more of a hybrid, providing both of those pieces.
We're getting a ton of questions from folks who are watching this. And in fact, that hybrid word is one that Kimberly has asked. How do you partner with a hybrid advisor? Someone, in her case, she's an IAR, she's an investment advisor representative with a broker dealer. So how do you partner with that kind of an advisor?
So this has been a very hot topic lately. And let me just say that, some of the stuff that we have seen across the landscape is when you're dealing with broker dealers are still very skeptical at offering crypto. And I think there's many reasons why. I'm not going to dive into that because we could probably have a whole webinar on that. But it's really more, if I'm with a broker dealer, so long as it's disclosed and you follow all the necessary compliance steps that need to be put in place. If you are given the approval and you want to work with somebody on crypto, and you use at your firm, you use XYZ platform, but yet you come and say, hey, Prime Trust, or whoever the platform is integrated with Prime Trust, I have a couple customers and I need to service these customers. What do I do? And what we would say to them is, pick one of the platforms that you want to work with. And if it's integrated into that platform you deal with at your traditional firm, then you'll have a much better holistic view. But it keeps that, segregation, because what we're finding is a lot of broker dealers, if they're going to get into crypto, they're creating a separate entity that's not the broker dealer, and they're running all the crypto items through that, so that the broker dealer is isolated in its own bucket, if that makes sense.
In fact, along those lines, you mentioned the integration of that. And so one question that just came in pertains to portfolio management software. Does Prime Trust integrate with any portfolio management software products like Black Diamond?
Yeah, so again, we are actually there's some press announcements coming out here in the near future. We have one platform or two platforms that we are using right now. You have Swan Advisor Services, OnRamp, and then Invent. Those are three platforms, that are currently, you can go sign up with those platforms. And then, they are integrated or integrating with Prime Trust right now. And those will allow you, many of the functionalities that people are looking for on the crypto side. And then really, I would say the bigger piece, Rick, is it's all the back end integrations that need to occur, because, it's all, at the end of the day, it's all about getting the data around. And so with Prime Trust, our philosophy, even with other custodians, I have a philosophy that, well, yes, we are custodians, and we're competing, if you will, some custodian, against other ones. I believe the more that the custodians work together and actually create an ecosystem that is open, that is, easy and has less barrier to entry, will enable the investment advisors and overall the community to continue to grow and evolve this space.
I'm just reading a question here that we got from Corey. There's a lot of news in the past couple of weeks about Coinbase and their disclosure that, of course, you saw, that they warned in their 8K that if they were to file bankruptcy, the coins in their wallets could be considered attachable by creditors, et cetera, et cetera. So talk about that. What impact or similarity does that have with Prime Trust? If Prime Trust were to go out of business, would the assets with Prime Trust be at risk by those account holders?
No, so we've gotten more calls on this topic than it's been a good one, but you got to use it to, you just have to, it's part of the education piece. And so as a trust company, when you put your assets with Prime Trust, those are segregated from like any of our company assets. Those are segregated assets. So if those assets, they're in your own legally binding custodial account with us, and in the event of a bankruptcy, things like that, those assets are would not be part of that. They're separate from there. Now, there's a lot of legal details and all that, but I mean, with what Coinbase came out and stated, I believe part of that had to do with that. Obviously, they are a retail platform, and assets that are on the retail platform, it's there's different nuances and different things involved. But no, any assets held at Prime Trust, those are all segregated, and in the event of a bankruptcy or some type of issue, they would not be part of or subject to that.
And Philip asks, do you provide any services regarding the Metaverse? Do you host anything, any compliance or Web3 building, anything regarding Metaverse?
We're starting to get quite a bit of interest on that. As I said, being in this space now for wow, I just looked down for 11 years almost. And it's crazy to think crypto's been around 11 years, but or even longer. But that said, what we're seeing, it comes in peaks and valleys, really, and we're starting to take a look at it. We're starting to get engaged with it. But our core focus has always been customer driven. So if customers come to us and it is a solution that is scalable and that will really change things and help the overall ecosystem, we're always looking at new initiatives. And that's really what my group is tasked with, is the strategic business development. And so part of what we do is dive into stuff that is very new, but we do it on a very small scale before we would ever roll it out to customers. So the short answer of that is we've had some customer interest, but it seems to be, it's kind of like NFTs. I think you have NFT 1.0, 2.0, and then I think you're going to see, and each time it matures, I think the same thing is going to happen with the metaverse.
Yeah, I think I agree with you. I think it's early in the metaverse,
Yeah.
just like DAOs are early, decentralized autonomous organizations. I think they're going to be a big deal, but we're not there yet. I think the token, the coin, the token, the NFT market is a now, and the metaverse and DAOs are a coming, not here yet kind of a thing. So I think it's smart for advisors to be aware, paying attention. I'm not so sure that it's ready for prime time just yet.
No, I mean, it's one of those things like, I mean, look how hard it has been for crypto to just even, if you will, make its way from retail, where it started, to institutional, which is a whole shift, because the institutional world is used to having first dibs at stuff. And now they are coming in and going, oh, wait a minute, this stuff's already really rocking and rolling. We got to catch up. And I think that's what you're seeing now. So, I mean, I think we're definitely seeing more institutions take a more serious look at this, versus before it was like, yeah, we're looking at blockchain. I don't know about blockchain. They would just throw the word blockchain around because it was like, we're looking at it. Okay, well, what are you looking at? Because I mean, where are we going with this? Like, but now people are diving in and saying, our customers are asking for this. High net worth customers are asking for it. So that changes the cards, because you have to start listening to what the customers are asking for.
So we're getting some additional questions here that are, again, really, I think advisors struggling with the basic operation and practical application of working with you. So walk me through it. I'm an advisor. I want to be able to buy digital assets on behalf of a client, or facilitate a client being able to do it. I might want to do this with a single individual client. I might want to do it with a whole bunch of my clients, maybe my entire book. So walk me through that. How's the process work?
Yeah, I mean, so we try to make it as easy as possible. And the way we do that is through the various platforms, and as I said, I mentioned some of them, but some of the we're going to be announcing even more. And as this list continues to grow, really what you would do is you would work with that particular platform, and that platform has a full integration into Prime Trust. Included in that integration, and key to what we strive for here at Prime Trust is a simplistic onboarding. Now, obviously, when you have an RIA and then an investment advisor, and the investment advisor and their customer, there's paperwork that's involved. And what we're trying to do there is make that even streamlined, so that, you can get onboarded as an advisor, then onboard your customers and do it in a fast, seamless approach. And the goal is that you are not going to have to do any manual steps. It's all, electronic and via our APIs. And that's what the platform would integrate to. So standard pieces, you would sign up, you go through our compliance. Once you go through our compliance, which includes the various forms, documents that need to be signed, allowing that advisor to, if they have discretion on the account, perform activities and whatnot. But our goal, again, it's to make it as seamless as possible, all the way from signing up, compliance, funding the account, doing the trading, the trade. So in our API, you can actually do trading natively. You don't have to go out to another provider, do those trades, and then settle them, with us. It's all done via the same API. And that's the same with, the allocation component. So if I'm managing multiple accounts, I was just on the phone with a firm today. We were talking about block trading and how, how that plays out. And we actually have, in our technology stack, the ability to do various things that allow that. So, it's a little different than what it is in the traditional world. But, when you're dealing with crypto, there are going to be differences. And I think any advisor that's looking at getting involved, a lot of them have done a lot of homework on this, and I attended many of your webinars and seminars on how all this is coming about. But I mean, really, excuse me, the heavy lifting will be done by the platform you're working with. And if you have your own, you can come to Prime Trust. We can assist you with integrating, getting set up, getting all the pieces. We have on our team, we have quite a few folks that come from either the wealth management space or the capital market space. So they have the knowledge on how, the overall process works.
We have a couple of more questions about the practical application and engagement, and then we're going to jump into questions about the marketplace right now, what's going on in the crypto world, asset allocation, investment thesis, the current crypto winter we're apparently in, and all that kind of stuff. We're going to get to that in a minute with Sean, but a couple of more questions that you've asked of a logistic nature. First, do you handle Roth as well as deductible IRAs? And what are the types of digital assets that people can custody on your platform?
Yeah, no, those are great questions. So actually, we are rolling out at June 1st a new beta product for IRAs, both traditional and Roth. And that has actually been about a 6-7 month process to get that up, built out, ready to go. We'll be doing, excuse me, conversions, transfers. You'll have the ability to trade, inside the actual IRA and whatnot. And so that's something that's right now that's coming here immediately. And then when it comes to the actual assets that we provide on the platform, right now we have about 8 or 9, and we've stuck to like the core top ones, but we're expanding that heavily. So we're going to be rolling out quite a few more assets here in the very near term. Something I'll tell you that I've noticed in the space is that a lot of platforms are out there, they have 150 different digital assets or whatever. What I find is that if these advisors are just starting to get into crypto and you're giving them access to some of these cryptos that I would say are a little iffy, it could, it might not make for the best experience. So before we run, we're going to walk, jog, then run. We don't want to put the cart before the horse.
Well, the crazy aspect about crypto, as most of us realize, is that it's a very top-heavy marketplace. Bitcoin and Ethereum together have 80% of the market.
Yep.
By the time you get to the top 10, you probably have 98% of the market. There are 10,000 coins out there, but the overwhelming majority have zero market share. Most of them are going to disappear. A lot of them are fads, gimmicks. Some of them are outright frauds. And so if you're really trying to do a fiduciary obligation for your client, once you get past the top 10,
Yeah.
You could argue, oh, you really want to go for the top 25 or the top 40? Great, knock yourself out for broad-based diversification. But if, Bitcoin and Ethereum with a Coke and Pepsi at crypto, you can do those two, call it a day, leave it at that.
Yeah, I mean, that is the truth. And, so I have 3 daughters, and, I have them in some target fund, or, target retirement date funds and stuff, and just basic stuff. And then, of course, being a crypto guy, I have them in some crypto. And do I put their stuff into crazy things that are very, a little off the wall? No. I mean, I stick to the basics, and, I don't give any financial advice of any kind. I'm not a registered investment advisor. The thing I always tell people, though, is just use common sense, do your homework, and do your research. And if you dive into some of these protocols and tokens, after probably about the 3rd or 4th page, no different than if you're looking at penny stocks, you're probably going to close the application and be like, all right, no, I'm not investing in those.
We're going to jump to the marketplace, I promise, but 2 questions just came in I just have to tackle because they're great questions. First, have you been involved with any RIAs who themselves have been audited by state regulators? And if so, what were those states? And did you pass the smell test or help that advisor do so?
So it's interesting. I mean, we have not had any RIAs that have come to us and said, hey, I'm being audited as of yet. Now, do I expect that to be coming? Yeah, it's just a matter of time. I mean, it's part of the standard process that they get audited. But once you add, the digital asset component to it, it's no different than when there's a new asset class being added to a platform. I would expect there's going to be further scrutiny. But we're here to assist our customers. And one thing, as I mentioned, that we pride ourselves on is compliance, the regulatory pieces, and all, the processes and procedures that go with that. So should a customer be audited, things like that? Yeah, absolutely. We would be happy to assist and do what we have to do as the custodian.
And Dale has just this fabulous question that I just think speaks volumes for the experience of a lot of advisors. He's really annoyed with his current platform because he's getting what he refers to as 0 customer service. And he's writing here that he wants to immediately onboard 30 clients with you smoothly, as quickly as possible. But he's struggling with some of the language that you're using, such as API. And I think it's a wonderful question because a lot of us sometimes forget that these acronyms are often foreign. So elaborate, you've used the phrase several times, APIs, and that's what you are, really. So yeah. Elaborate on what an API is and why that is so fundamental.
Yes. Yeah, absolutely. So really, an API is an application programming interface. And how do I put this? In general speak, what that means is the platform that you're using needs to communicate with the custodian. And in order to communicate with the custodian, there is a set list of code and language that we will adhere to and allow your application to write to, which will allow you to then communicate seamlessly between your front end application and the back end applications that Prime Trust uses. Because, just to make this even more simple, when you use Prime Trust, while you're getting the custody compliance, the funds processing, liquidity, that's all through a single API. So that's one single connection into Prime Trust. And then we handle all the pieces behind the scenes, which is actually, quite a bit of the work, because we're bringing together, we've either built it in-house or we work with a third party. We are not a firm that is opposed to working with third-party technology providers, because there's certain things that are just honestly commoditized. So that's really what we mean when we say API. The average advisor, by the time they're using our solution, their platform, unless they built it themselves or had it built themselves, will have already either integrated with us or know how to integrate with Prime Trust so that you can take advantage of our services.
So the API is essentially the user interface. It's what you see on the website. And what's driving the tech underneath that is kind of behind the scenes. You don't have to worry about that. So the API is essentially the interface between you and the user.
Yeah, I mean, you have the user interface, and the user interface could be the RIA user interface, or it could be the customer side. So there's two sides to that. So that all of that needs to be fed and be able to send to Prime Trust. So that's what these APIs allow you to do.
So you're not an investment advisor. I'm not going to ask you for your advice or recommendations. However, you have your eyes pretty closely on what advisors are doing by virtue of your platform, the work that you see them doing integrated with you, and the contact you have with advisors across the country all the time. What do you see that advisors are doing? What percentage of a client's portfolio are you seeing that advisors are generally recommending that their clients place into crypto?
Wow. That really varies and I always tell people, like, because they always try to ask me, so is Bitcoin, would that be considered aggressive? Would that be considered more passive? And what I always tell people is, it's really what you feel it is. If you are okay with the volatility, because that's the one thing people, I will tell you time and time again, come to me about. They're like, I looked at Bitcoin and that thing was all over. It was $1,500 up. Next thing you know, it's $2,000 down. A lot of people will be like, well, this has been around for over 10 years. So how is it still early? But a lot of early asset classes are still extremely volatile. Now, as they mature, as instruments come out, whether it be derivatives of various kinds, you're going to see more adoption. And as the adoption occurs, I think you will see more stability in the actual price of the underlying assets. But what we're seeing from advisors is really, it could be anywhere. It seems to be the sweet spot seems to be between 5 to 7% of portfolios is what we're hearing advisors are making recommendations for. Again, though, I don't think there is a gold standard. I will tell you, I think the more risk on advisors, they take a more aggressive approach. And then we have other advisors that come to us and they start talking about it. And next thing you know, they're like, no. And I'm like, okay, there's not much I'm not going to twist their arm and be like, you should really do this. No, I wouldn't. Everybody has a different taste. Mm-hmm. But yeah, around that 5 to 7%. And I think you're going to see that continue to change, especially as adoption occurs, and especially as the current generation retires. Now you have a new generation, and that new generation, they have a much different appetite for risk. And I think we've seen that in the markets as of late.
I think they also have a different attitude about the role of crypto as an asset for long-term ownership. So not only do they have a greater appetite for risk, they have a greater natural inclination to allocate to digital assets. And both of those are going to cause them to have a higher allocation, but perhaps even higher than is prudent. In my new book, The Truth About Crypto, I advocate a 1% allocation on the attitude that this is a very volatile asset class, that history tells us a below 1% allocation is enough to materially improve the returns. But if it does blow up the 1% loss isn't going to harm you financially. It won't interfere with your ability to retire in financial security.
Yep.
And it allows the client to shrug at the massive volatility. Yale did a study and they said at most 6% is all you need. And they actually targeted about 3%. So the CFA Institute came out with a study and they said 5%. So everybody who has been studying this stuff is pretty much like you're describing, low single digits. There's really no need to do 20, 30, 40, 50% of assets. That's not investing, that's speculating. And so you need just to have your eyes wide open. I would also argue that if the investment thesis proves true, and this does wildly outperform other asset classes, as many people believe it will, remember that that 1% allocation is going to double to 2 and then to 4 and then to 8. And pretty soon you're going to be at a double-digit allocation simply if you don't rebalance the damn thing. So I don't know if you have to start at 5%. I think you'll probably find out you'll end up getting there anyway, just due to the outperformance compared to other asset classes.
Yeah, I mean, I have a lot of friends that, you know, they'll call me up all the time and ask me, what should I do? What should I do? I'm like, I don't know. I mean, what, you know, I can't tell them what to do. I can, you know, they have to decide what's best for them as given their, you know, level of risk, level of ability to handle the volatility, because that's really what it comes down to is, you know, certain assets are going to be much more volatile than others. Certain assets you're getting in because you're looking to earn yield, or, you know, you're not really concerned about the underlying price. You're really more concerned about the yield that you're earning. So, and that's a whole new topic that, you know, is coming, and something that we're very focused on. And I think that's going to also be a value add to the investment advisor community, because if I'm sitting on a large amount of assets, naturally, what do you want to do with those? You want to allow them to work even further for you. So I think we've passed the stage of, okay, we have all these spot exchanges, and now what's the next phase? The next phase has been, now you have, again, the younger generation driving alternative ways to either lend, borrow, or, you know, there's the staking, proof of stake. But there's, you know, each one of those has a subset of regulatory pieces attached. And so, you know, there's so many. That's why when I talk to people, I'm like, you know, they ask me, oh, what's going on in the crypto world? I see the price is down 5K. And I'm like, so, like, I mean, and then I'll see them next week and they're like, oh, it was up 17K or something.
We've seen the same thing in the stock market. We've seen in the past month massive volatility in stocks, with, you know, individual stocks dropping 20, 30, 40% in a single day. That's just the inherent nature, you know, of idiosyncratic risk and volatility in the marketplace in an environment like this. So for people to single out crypto is, I think,
well, it's easy. It's easy. It is the new kid on the block still. So because it is the new kid on the block, it is so fast. I've never seen. In all the years I started on the floor of the CBOE, and I've never seen people jump so quick from one side to another. One day they're all in. The next day, nope, I'm not touching it. And it's, you know, but again, it comes back to education, because if you educate yourself about what it is you're investing in, even if an advisor is investing for you, you know, they have discretion, they're advising your portfolio, and they put you in crypto. Before they put you in crypto, you should probably understand what it is they're putting you in, and do your homework so that you can be more empowered and not just rely on somebody.
And that's the really the goal of the financial advisor, the obligation, I think, to make sure you're providing that level of education to your client so that they do understand what it is going on. You mentioned staking, lending, and borrowing. We have just launched a new learning module in our education center at DAC-FP, which is free for those enrolled in our certificate program, a 1-hour 1 CE credit course to help people understand how do you earn yield, how do you generate income from your crypto, which is a relatively new thing and most are not familiar with it, but the yields are enticing, anywhere from 2 to 20% yields that are available.
Yeah.
And I've seen some platforms offering even more. So advisors owe it to themselves to learn, as you said, about staking, lending, and borrowing, and you can learn about that at dacfp.com. One other question I want to ask you as we wind down here, Sean, just as you've observed that advisors are typically doing 5 to 7% portfolio allocations to crypto for their clients, what is it that they're recommending? And I'm going to give you 4 choices. You tell me what you're seeing among advisors.
Sure.
Bitcoin only, Ethereum only, a combination of Bitcoin and Ethereum, or Bitcoin, Ethereum, and a bunch of other stuff. What is it that you're generally seeing advisors recommend to their clients?
Yeah, I mean, right now you're at mostly Bitcoin and Ethereum, and then you have all the offshoots of they're based on Ethereum, and that's where you're starting to see more people get involved. I mean, at the end of the day, there are certain tokens, and this is why we've also been very selective on the tokens that we offer, because there are various tokens out there. They could be deemed a security. And, by the time everything catches up, we're thinking ahead, and we're thinking, we put it through the various tests, the various pieces. But we're seeing mostly, I would say, a lot of utility tokens. And then in the last, call it 6 months, you've had a huge push on yield-based tokens. But to that point, I don't think a lot of people understand the complexities that go into some of these tokens. Just buying it is one thing, but if you're buying it and want to monetize further on it, that's a whole nother topic. And it opens up. So it goes back to, what we're seeing mostly is Bitcoin, Ethereum. Now we're seeing, Solana, AVAX. We're seeing some Stellar based items coming. But I mean, you're seeing a lot of different protocols, and it's interesting to see how fast this space is changing and evolving. I mean, I can't even keep up with all the news. I try to, and I don't, Rick, I don't know how you do it, but on a Sunday I have to take like an hour, and I go through news from like the previous week, and I'm like, how the heck didn't I see this?
Yeah, it's amazing how dynamic it is. That's the problem with this industry. It's a tech-based industry, and tech moves at an exponential pace. So the innovation is coming so rapidly fast. It's amazing. We've been talking with Sean Ristow, the EVP of Prime Trust. Sean, if people want to get a hold of you, we see on the screen in the lower left, primetrust.com. Give us a final word, if you would.
Yeah, no, Rick, it's always great to be on these webinars with you. If anybody wants to reach us, primetrust.com or Sean at primetrust.com, feel free to reach out. We are definitely committed to this space and committed to growing, not just from a retail point of view, but from an institutional, and then also in the wealth management space, because the things are changing. And as they do change, we want to be there to assist our customers and future customers in that change.
I appreciate that a lot, Sean. It's been a lot of fun being here with you. I want to tell you that we have more events coming up. June 8 and 9, our biggest event of the year, live in person, DACFP Vision. It's in Austin, Texas, a 2-day event. It's going to be a ton of fun. Some of the biggest experts are going to be there in the crypto space. And we're taking everybody on a tour of a Bitcoin mining farm. It's going to be a blast. And then we, in fact, have a virtual event devoted to Bitcoin mining on July 20th. That's a virtual event. You can register for both at dacfp.com. And I hope you pick up a copy of my new #1 bestseller, The Truth About Crypto. It debuted 2 weeks ago, and it's getting rave reviews already and doing really great. And I am just really excited about how well it's doing. If you want to understand this space better and help your clients understand it, read my new book, The Truth About Crypto. And if you really want to demonstrate your expertise to clients, obtain your certificate in blockchain and digital assets, an online self-study course, 13 CE credits. First half of the course is all about the tech. The second half, all about practice management, the investment thesis, how you build a portfolio, regulation, taxation, compliance. Most importantly, how do you talk to your clients about this? And as I mentioned, we've offered several new online self-study courses, 7 of them this year. 2 are already online. As I mentioned, first, how to generate income via staking, lending, and borrowing, and a 2-hour 2 CE credit course, the taxation of digital assets. A lot of confusion in this space, and we're providing the clarity that people need so that you understand how taxes work and you can explain it to your clients. We're also offering a new master class. This is coming in June, and I invite you to attend. It's free. Invite your clients to sign up. If you're trying to get them to understand crypto, invite them to attend my master class. They can learn all about this at the TAYF. That's the TAYF.com. That's short for The Truth About Your Future. And they can watch my masterclass, The Truth About Crypto, for free. And we also have a monthly 16-page subscription newsletter, The Truth About Your Future, which has an awful lot of content on crypto. And because I'm no longer a practicing financial advisor, no longer managing assets, no longer serving clients, I'm not a competitive threat. Crypto education is all we are focusing on. So I invite you to learn all about that. And you can learn all of that and more at the truthayf.com and at dacfp.com. I'm Rick Redelman.
Quick shout out to you, Rick. I did get your book. Thank you for the copy. And I started reading it, you know, between having 3 girls, all under the age of 8. You know, I get a chapter in here and there. So but it's great. I've really enjoyed the book.
Well, I really appreciate that, Sean, very much, and all your support and help over the years and forwarding crypto education for advisors and consumers. If we can be helpful, please let us know at dacfp.com. Reach out to Sean at sean@primetrust.com. We're happy to be helpful. I'm Rick Edelman. Thanks to Sean for hosting this event. And
Thanks, everyone.
Let us know how we can help. We'll see you again soon.